So I just got a chance to sit down and talk with a good friend of mine, Andrew Lawrence. He's a real estate agent with Cascade Sothebys here in Bend, Oregon. He's also an investor in the fund, and he's sourced land for the Hiatus Capital Fund in the past. And so he and I sat down and talked through what's going on in the Bend housing market, what we're seeing with pricing, seller psychology, buyer psychology, short-term rentals, long-term rentals. We just kind of cover everything in about a 20-minute conversation. Super fun. I think you're really going to enjoy it. Okay, so one of the biggest things in Bend has been new construction the last couple of years. So tell me what we've seen in building permits over the last year and kind of what that means for today.
Well, building was super red hot, just like the rest of the housing market in the beginning of 2022. We saw the number of permits pulled peak in March, which is pretty typical. Most years it peaks in March, April at 87 permits. For November, it's been steadily declining since then. In November, there was 24 permits pulled. So kind of a huge pullback in the new construction market. And we're seeing that anecdotally if you just drive around and you're starting to see empty lots with not a lot of new starts.
Yeah, okay, so building permits are way down. So how do we interpret that for this next year? That's going to change what supply looks like in 2023.
Yeah, so I actually think it's going to end up doing the exact same thing that we got ourselves into trouble with. Builders are pulling back on their new construction stuff because everybody's scared because the economy may be entering into a recession and there's a lot of unknowns. So builders are obviously pulling back, and that pullback we're probably going to see even more of a shortage after we kind of run our course with this recession and just kind of the overall bad sentiment in the market. And so I think housing is going to kind of take back off again, then we're going to be behind even more units than we are now.
Mm-hmm. So I wonder how that affects pricing over this next year. Of course, as if there's less supply, that would imply that prices are either supported or go up over this next year. But what are we seeing right now as far as pricing? And I guess maybe start with the last year. What have we seen over the last year and what are we seeing now?
So same thing, 2022, prices kind of peaked in May, June, have been steadily declining since then due to interest rates and the Fed, doing their 75 basis points pretty much every month since then. Prices have been steadily declining. It's kind of turned into a bit more of a normal market. Days on market have gone way up. You no longer can sell a single family house in 2 hours on Craigslist.
With 11 offers.
With 11
yeah.
offers, all over asking. So it's certainly cooled off. Days on market, I think, are up to 18 right now. But anecdotally, when I'm showing a house and going through, I'm seeing a lot higher days on market. There's kind of that sweet spot, stuff that is appropriately priced. Sells within the first 2 weeks, sometimes multiple offers even now. I mean, 2 weeks ago I was in a multiple offer situation with a house. It was priced excellently. They got 3 offers including ours. We went 10,000 over asking. We actually did not get the offer accepted because somebody went higher. But after that 2 weeks of days on market, you're starting to see those really stretch out. So your best possible window to sell your house even now is within 2 weeks days on market. So there are buyers out there and people are actively purchasing homes. It's not all doom and gloom, but it's just kind of getting back to a normal market. What was happening from 2020 all the way to 22 in May was just not sustainable. It's kind of a COVID bubble.
So stuff that's priced right is still selling, and selling maybe even with multiple offers. But it sounds like because of that long days on market, maybe a lot of stuff is not priced right. What's the psychology that you're seeing right now with sellers? Are they reticent to reprice things and bring them down? Or are they more likely to are they testing the waters and then going to pull something off the market if they don't get their price? What are the sellers thinking?
So I think there's a lot of, obviously they're not professionals. I'm in the space every day looking at prices all the time. So there's a lot of people that are kind of lagging behind the market. They saw this skyrocket over the last 2 years and they still think it's kind of up there, although they're about, 5 months too late. They're just not as educated and dialed in on the housing market. So what they're doing when we go to listing appointments and give our presentation, a lot of times they're disappointed with the prices we're giving them, because we're saying, hey, if you price this house right, it will sell within 2 weeks, and this is the price that we think it'll sell at. There are a lot of oftentimes 10% higher than, or they think their house is 10% higher than what we think it is. So I think a lot of people are putting their homes on the market at that inflated price, and that's why you're seeing a lot of those higher days on market, and then they're slowly coming down. There's not a lot of big price reductions because they don't want to miss out on that $20,000.
$20,000, yeah.
The problem with that is, though, as we're in a declining market, they're chasing their price to the bottom of the market, and then a lot of these houses that I'm seeing are vacant homes that were purchased within the last 2 or 3 years as investment properties and rentals. And so the carrying cost of a vacant home, because it's easy to get into houses these days, you call up an agent and they're like, oh yeah, 2 hours notice, that's fine. You're going into it, it's a vacant home. So people are carrying the cost of a vacant home, and it's sitting on the market for 3 months as they do these incremental little price drops.
Adjustments. Yeah. So that kind of is a good transition into the rental market. So if you say a lot of these buyers came into Bend and bought an investment property in the last couple of years, then they weren't going to be living in it per se. So they, we've seen a lot of changes in the short-term rental market in Bend with the city creating a bunch of rules. We could talk about that in a little bit differently, but strictly right now, so they came in for these investors to have long-term rentals. Did the tenants move out? Where did the tenants go?
Yeah, so I think I mentioned before, COVID kind of created a bubble for the housing market at large. So the housing market is sales, listed homes, rentals, and short-term rentals. And COVID created a bubble for all of that. So the prices got inflated due to cheap money, but it was also people were leaving the kind of more restricted, high population areas for smaller places, smaller towns, because they could work remotely. Mm-hmm. So that had an effect on house prices with the ridiculously low inventory that we've been experiencing over the last, really like 5 years probably. And then the rental market, somebody didn't buy a house, they moved here and were paying, tons of a ridiculous amount of rent that inflated the long-term rental market. And then the short-term rental market really got inflated because the bigger cities were shut down. And so what's the best thing to do when being inside is frowned upon around large groups of people is you go to a place where you can play outside, and Bend's a perfect place to play outside. So we saw the STR market prices skyrocket and go crazy. So everybody was trying to get those. Kind of the more active investors. The more passive investors were looking for the long-term rentals, and they were cash flowing great because of the interest rates and just the massive amounts of people trying to move here. And the same thing with the housing market. We had so little supply of listed homes because people also didn't want to list their home in a pandemic, kind of not knowing what globally that was going to do for us. And just the the unrest of that whole situation. So not a lot of people listed their homes. The ones that did got these crazy inflated prices, and that's why we saw the 40 to 60% appreciation over the last
In
2
2
years.
years.
Yeah. So that's all kind of corrected. Like Elon Musk did it, in Twitter. He said, hey, everybody's got to come back to the office. Jack Dorsey had said before, Twitter will never have an office, even before COVID. A lot of bigger companies, I showed a house just the other day. It was somebody that had moved from Texas because they had remote work that they were going to be able to do indefinitely. 9 months later, they're relisting their house. They're moving back to Texas because they don't want to lose their job because they need them back in the office. So
Interesting.
a lot of that's happening.
Yeah.
And that's affecting home sales, long-term rental market, and the STR market.
Right. Well, especially in Bend, because our Bend has the largest remote workforce in the country per capita. 12.1% is what it kind of peaked at this last year. And so I haven't seen any stats if that's come down. Probably things will shake out by the middle of the year next year, and we'll know if that's gone down or, if just people moved out. But yeah, we had a huge influx of people. About 13,000 people moved to Bend over the pandemic 2 years. That's, kind of July 2020 to July 2022. Do you think we'll see our population actually decrease and go down, or do you think just the growth rate will slow down? What do you think happens demographically to Bend given this shift in remote work?
So I think the population was inflated because of COVID. People are leaving. Yes, I think we'll see a slight decrease, but historically, overall, after this all shakes out, it'll be like, oh, more people moved to Bend than left. But in the short term, over the next year, I see more people leaving Bend than actually moving here.
So maybe growth at a decreasing rate, or maybe it'll shrink a little bit. Population will actually shrink. We'll see. So let's switch for a second and talk about the long-term rental market. So kind of back to those investors that bought a home here to rent out, for a 12-month lease kind of thing. What's kind of the health of that market, the stats on that market? How's it trending?
Okay, well, what we're seeing is a massive uptick in available long-term rentals. I have a couple stats just on my phone that I jotted down prior to this. So 3-bedroom, 2-bathroom homes in Bend. This isn't talking about any of our smaller markets. There's 135 of those available for rent on Zillow, which is an incredible amount of available rentals.
Put that in perspective. Is that compared to a year ago or something?
Compared to a year ago, I believe there was 20.
20. And now there's 160.
At all price points, there
Okay.
was about 20 or somewhere in there. Now at all price points, there's 135 3-bedroom, 2-bathroom homes available. Now only 34 of those are under $2,600. So if you do have a home that's in kind of the lower price point, you might be okay. Keep it under $2,600 and you'll probably get it rented. You're only competing with 34 other people.
Interesting, right?
Versus there's a lot of those homes that are available from $2,700 to $10,000, and there's a ton of those ones in there. The 2-bedroom houses available here in Bend, there's actually only 17 of those, so the smaller places are really still in demand. And 17 of those this time of year in this market is not a lot of them. It's not like we have none of them, but it's not a lot, so there's some opportunity there. Of those 17 of them, 6 of them are under $2,600. So if you hit the price point for a 2.2 correctly, if it's a small 2.2 and you price it right, that'll get rented up. As far as the 1-bedroom, 1-bathroom, those are pretty much always the most popular places. So those are the above garage ADUs, things like that. That's probably the most popular model, or small tiny homes, and with ADUs and stuff like that. There's only 7 of those available in Bend, which is an extremely low number. 2 of those are at $2,000 a month. So you're not competing. That space is not competitive right now. A month and a half ago, when I spoke at the city council meeting, we were talking about long-term rentals. 1-bedroom, 1-bathroom houses, there was 25 of them available a month and a half ago. So that market is still pretty crowded, and a lot of demand in the smaller places. But the 3-bedroom, 2-bathroom homes, like typical stuff that everybody's been building for, I don't know, the last like 50 years.
Right.
There's a lot of those
In
available.
over inventory, yeah. And so maybe in the tastes of the household consumer, person that's like looking to rent or buy a home, there's actually more demand for smaller stuff, it sounds like.
Yeah, and like the demographic of people that are moving here are, remote workers, work in tech, or can do something remote. Those people typically don't have large families, a lot of couples or single people. And so they don't need, and they make good income usually. So they don't need to house hack with a bunch of roommates. It doesn't need to be 3,
Unrelated adult roommates.
a teacher, a nurse, and somebody that works at the gas station or whatever. They don't need to kind of house hack to get that house. These people that are moving here make good income, and they just want a place to themselves, or a place, 2-bedroom place, so they have a guest room and then their room for when people come in town. So the model is kind of shifting on housing, for sure.
Yeah, totally, which is something we talk about a lot. That's the missing middle housing piece, is developers for 50 to 70 years have not built very much missing middle housing. And so, but kind of going to like last question. All right, so I'm a developer builder here. We're getting ready to list. We should have certificate of occupancy this week on our first home and our Roosevelt project, which is right by the old mill in Bend. It's a 3-bedroom, 3-bath home. It's about 1,350 square feet in the main home. So small, but very usable. And then also has a studio ADU, like kind of a lofted open bedroom floor plan above a garage. And that's kind of on one lot. We're getting ready to list that next week. From what you're seeing out on the market, what's your advice to me as I go out and try and sell what will ultimately be 4 of these? They're not all ready, just one of them's ready, but what do you say to someone like me that's kind of entering the market at this time?
So number 1, make sure you appropriately price it. Don't shoot for the moon, because if it sits on the market for 90 days, houses kind of get stigmatized there. So price number 1, staging number 2, highly important to put your best foot forward and stage the house. People can kind of see you when they walk into a house, the possibilities of a home like that. And 3, just be everywhere with that house. Put it in front of people's faces, because there are buyers. There are well-qualified buyers with good income, plenty of cash, for good down payments. Even in with the high interest rates, you need a little more cash to make your payments more manageable. And you guys, the Roosevelt location is an absolute killer location, and that is kind of, your guys' houses aren't going to be competing with the 3-bedroom, 2-bathroom house in one of the Brookswood subdivisions.
It's a different buyer, maybe.
It's a different strata of buyer. So I wouldn't be too worried about listing it now, just because you're kind of targeting a different buyer pool. And then you do have that, if somebody did come in and was a little bit worried, you have that ADU, that 1-bedroom, 1-bathroom ADU, or the smaller ADU that we just talked about, is in high demand right now because there's just not very many of them available. So that could also kind of supplement the mortgage, which is really comforting to buyers, especially in this type of market.
Right,
So,
when mortgages are high.
yeah.
What have you seen as far as, I've heard some stories out there about seller incentives, like sellers offering to buy down an interest rate. Are you seeing a lot of that yet? Are sellers more willing to do that than come down on price? I guess, how does that work as an incentive? Especially thinking as a builder, is that
Yeah.
something we would look at doing?
Well, as a builder, I would definitely say if you have to negotiate, offer a buy down with seller credit, buy down because your comps look better. So that's just one piece of practical advice I'm sure you already knew. What I'm seeing out when I write offers is every offer I've written since I think July has had a credit in there for the buyer. I've been putting that in. Not all of them get accepted, but it's just a little piece of negotiating strategy I like to use, and we're definitely seeing that as kind of the norm. People offering credits, or if somebody asks for a big price reduction, you can pull that credit off the table. But that's a pretty good incentive, especially just as the cost of money is more. That helps with closing costs. They could use it for an interest rate buy down. So there's all sorts of incentives that really helps, and we have been seeing that a lot. A lot of the listings now are, if you just go on the MLS, they're putting that right in the comments, and it's probably more than 50% of the listings. But generally, people are using that in the inflated price listings. So if you see an appropriately priced house, you won't see offering a seller credit because everybody knows, like, oh, this house is going to go pretty quick because it's appropriately priced. So they're not offering that because they know they're in a good position. So it's maybe something that you end up having to do. But the best thing is just appropriately price your house. And there's still plenty of people with plenty of money that are buying and selling real estate here in Bend. I mean, the cash deals in November upticked. I think there was like 31 in October, and they're up to 55 in November. So those cash buyers are kind of coming back to the
in,
market too.
right?
Yeah.
Yeah, which, maybe they support the prices for a few months. So awesome. Thank you.
Yeah, thanks.